Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, team. How's everyone? Welcome to Wealth Coffee Chats with me, Alex, on Thursdays, all about financial planning. So, pretty interesting time of the year for us here in Australia. So we have started the reporting season. So runs typically over the August period. Good morning, Sonia. Good to see you. Good to see you. So reporting season, what does that mean, right? So what does it mean? It means that all the listed companies on the HECS will provide their financials, outlooks, some commentary around what is going on, and that will create a little bit of action in the stock market, which will be quite interesting to see. So at the moment, as things stand, we're having a really decent year so far. We're up around 7% for the year. So that's from Jan to now. So the first sort of 7 months have been relatively good. We did have a blip in there with the tariffs. So I'll cover that. I think that's when I first jumped on the Wealth Coffee Chats. That was one of my first topics. And you'd know that when that happened, the prices fell down quite quickly. But if you take that low from when to where they fell to now, that rebound is now equating to about 20%, which is pretty pretty good, right? So, and that's only within about 4 months, 5 months, really. So, an amazing sort of rebound there. Good morning, Pat. Thank you. Yeah, definitely. Let's bring on the strong vibes. Absolutely. Hey, so look, team, what I'm looking to chat to you about, and I think something that perhaps I haven't spoken to about enough, and that is about just about not only the strategy that you put together, which I've been covering off in bits and pieces over the last several months, but also the I guess the ongoing part of the equation as well. So obviously, if you have built a house previously, you would probably realize that building the house is probably a very big task. You everything has been done, but then after that there's a lot of maintenance, right? So you've got to keep up. I don't know, like for example, for me, I get an aircon guy coming around every 2 years to clean all the ducts and stuff, and then pest control, like all these little things that people coming around and doing. So, and that's all part of the maintenance. So as always, I like to sort of bring this to real life situations, and a topic that came up over the last couple of weeks. I don't know if it's been covered all that well, in the media, but it definitely was in the headlines, and that is about a car brand, Porsche, right? So if you don't know, Porsche is part of the Volkswagen Group company, so one of the biggest companies. So you've got your Audis, Porsche, Bugatti, Lamborghini, all of these brands. They're all part of that bigger group, and Porsche is this sort of almost like a standalone car brand. Typically, I guess a pinnacle of before you sort of hit the supercars, hypercar sort of level. And the interesting part about this is that the CEO of Volkswagen Group, who is also a CEO of Porsche, came out and said that, hey, listen, and I'm going to quote him, actually. I've got a quote here. So this is what he said exactly. He said, the business model that worked well for several decades is no longer the business model that worked well for several decades no longer functions in its current form, right? Which is quite interesting to hear, and also alarming from the head of the group to come out and say this in such a public forum. And I guess you could sort of see the reason behind this announcement, or I guess this comment, because if you look at the share price, so they're listed in Europe, right? So they're listed a couple of years ago, so they broke away from the Volkswagen Group, the Porsche component, and they're listed separately. And from the time that they're listed to now, they're down about 50%, right? So, which is, I don't know if you guys know, but during COVID, I kind of like developed this fascination for Porsche, because all of a sudden it wasn't all of the car brands went up in value, but this one in particular was almost like, nothing can get it, because the valuation on these cars never drops. It's like a Toyota, but like with a German badge on it. So, and I don't know if you know, but sort of about 18 months ago, their flagship car, which is a 911, would always sell above market price. Whereas now it's kind of, it's starting to turn, and they're starting to sell at a market rate, and sometimes even discounted. Obviously, there's different models. Some are very much you need to be part of the group in order to get into it, but others, I'm just talking about more generic stuff. But where am I going with this, right? So the point of this story is that like any sort of strategy, you do need to review it and update it as things change, right? So what he said there, so the CEO, his name is Oliver Bloom, he said that, the strategy that they've put together in the past does not fit the current model, which is, if you look at your personal situation, that could also be a situation that you can find yourself in as well. Like specifically now with all these sort of upcoming changes to the superannuation tax, etc. You'll find that when you've originally set your strategy, yes, it's valid. However, you need to build on it. It's just the foundation, because after that, you need to build, you need to upgrade, you need to, redo it. So like renovate it, right? So if I was to use more of a property sort of slang there. So, and this is why when I speak to my clients, I always tell them that, look, we can definitely help you out with the strategy, but I think that the most impact will be in the ongoing sort of review and update to that strategy, because things change. Like, for example, something minor like, an increase to the super guarantee from 11.5% to 12% that took place at the start of July this year, right? So for someone who previously had a strategy to maximize the contribution, all of a sudden they have to go out and redo their numbers, right? Not only because potentially their income has gone up with inflation, for example, but also to make sure that they're within the right within the right caps for that contribution strategy. So ultimately, the point here is that you want to continue to refine your strategy and build on it in the future, right? So, and you can see this from someone like a Porsche, right? So they're a very big corporation that, they can see that without updating the strategy, that can put them really on the back foot with what they are doing, right? So 2 years ago, they were untouchable. Now, they are struggling, right? Obviously, there's many different factors that contributed to sort of that statement, and where it has the meaning behind it. But if you apply it to real life situation in financial planning, you want to be, you want to stay alert, you want to update your strategies in relation to the changes to the legislation, right? Whether that's super, whether that's tax, whether that's business, right? So that there's many different sort of changes that are happening daily that you may not be aware of. So it's our job to be up to date with them. We can't be up to date with everything, but we also, as part of our arrangement, we also speak to your other professionals like accountants, solicitors, mortgage brokers, and get an update from their end as well. So I guess, from your perspective as a listener, what can you do, right? Well, number one, we're going through a reporting season right now, right? So it's a really good time to have a look at the financials for any specific business. So, for example, you might look at the banks, right? Because you probably, and most likely, are invested in them in one shape form, because it's they kind of comprise about 15% of the market. So, you could have a look at how they're performing. What's that? Typically, you don't have to read through the whole report. You can have a look at just the sort of the executive summary, and it provides you with a lot of detail in there. But you can sort of see how they are progressing, right? So, as you know, the interest rates were higher this time last year. Now they're coming down. What's the impact on that? What are the dividends doing? Because that's important, especially if you want to utilize franking credits, or you are relying on the income from your portfolio. So, because that will give you a bit of an indicator into what you are expected to see in the next sort of 6 months. So, from that perspective, you can then retrospectively fit that into your portfolio. If you, for example, have a basket of shares in a particular sector, you can go to that particular company and sort of gauge a bit of an idea. It's not going to be like for like, but you'll probably have a lot of similarities within that. So, and we're doing that currently with our clients as well in their portfolios. So what I'm seeing is that, like I said at the start, the equities space is doing really, really well. The defensive side, the fixed interest, that is now sort of coming back online. We're seeing some positive income coming from that space. That's purely on the back of high interest rates, so better income. The capital component is a little bit up and down depending on the strategy there. So if you've got a longer term bonds, then the valuation on those might be a little bit down. But if you've got a shorter term bonds, then the valuation is a little bit higher. So that is looking quite good, because honestly, the last probably 3 years, it's done very little to contribute to the portfolio performance. Property space, more on the commercial side, that is also, it's always been strong from the income perspective, which is quite good. But from the capital perspective, it is currently being impacted by the higher interest rates. So, but from our end, we are not overly worried about it, purely on the basis that, we've still got inflationary pressures from the tariffs that are starting to sort of solidify in terms of what they look like for individual countries. And ultimately, that's going to come down to the consumer at some point in time over the next couple of years, which means that typically hard assets like property, gold, silver, or commodities in general, they tend to be worth a little bit more than in the past. And you can sort of probably go Google it and see where the prices are now with those assets. So from your perspective, right, so you can use that information and apply that to your set of investments and sort of review and see how you're going, because ultimately that will then, that's going to be like a sort of like a mini review service of your investment assets, which you can then decide, am I going to stick to that same strategy that I've been applying for, X amount of years or months, or am I going to pivot to something different on the basis of the following, which is, what you have found in terms of information that you could apply and justify what you're doing it for. I wouldn't necessarily just go off and, do things without really researching them or applying a thought pattern behind it, because strategically, you could plan all you want, but, things can go in a different direction, like what we saw with the tariffs a few months ago. Everything was looking very great, but the tariffs, bang, all of a sudden, all the financials, everything went out the door, and it was difficult to predict where the future would lie. Obviously, a few days later, that was put on pause, and then that's when we got that relatively decent rebound. Good morning, Jeff. How are you, mate? Good to see you. Thank you for jumping on. I hope you're enjoying the episode. But yeah, just again, summarizing the point of today is the importance of regularly reviewing your position. And I know some of you guys on the call would be feeling the same, because typically you would start with one strategy, you would get you would get through the main sort of implementation points, and then you would all of a sudden start thinking about future strategies which we may or may not have addressed or you thought of because you just didn't have the knowledge. But now that you do, you want to go through the motions of applying that as well. So yeah, very interesting period. So you'll probably see a little bit of up and down in terms of individual stocks over the next sort of 3 to 4 weeks. I think it should finish up around end of August, the reporting season. So don't be surprised, but ultimately, it'll be a good indicator as to where we are heading over the next several months, which will be quite cool. So reach out if you have any questions. I hope you enjoyed this sort of shortish type of update. But remember, reporting season, review your strategies now, because later in the year you're going to be focusing on other things like tax planning and things of that nature, and make sure that you don't stay stagnated, right? Always try to elevate and build up from where you are now. So hope you enjoyed this. See you guys next week. See you later. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team.